So thank you all for joining today. We're very excited to have a couple of very distinguished panelists join us today to talk about central bank digital currencies and specifically the technology behind them and the retail use case. So just to do a little bit of housekeeping first, everyone, because this is a large audience, please remain on mute. If you have any questions, enter them in the chat and we will, or I will be asking those questions throughout the session as well as at the end. Now, in terms of where we are today, I know Bitcoin has reached some new heights recently, but last December, we heard experts from Standard Chartered Bank, the World Economic Forum, Consensus, and Stanford University talk about stablecoins and whether or not they could coexist with central bank digital currencies. In that discussion, there are a number of questions around the technology CBDCs can be based on and the resulting trade-offs. So today we are very honored to hear from two experts actively working on CBDC projects. As this is not entirely a policy discussion, we'll be going deeper into the technical requirements and potentials of CBDCs, the trade-offs, and the state of active implementations. Now, to give a quick background on CBDC technical requirements, they include resilience, security, scalability, transaction processing, confidentiality, and interoperability. Because there's so many of these technical topics to cover in one session, we'll focus today on interoperability, confidentiality, and security in more detail. So before we get started, I'm very honored to have our panelists introduce themselves. Jim and Neha, could you introduce yourselves and give your background before we get started with the questions?
Sure, I'll start. Jim Cunha, I'm a Senior Vice President at the Boston Fed. I've been there for 36 years as of November, and I spent my entire career focusing on payments, technology, and security. Right now I'm responsible for two initiatives. One is trying to reduce fraud in the payment system in the US, and the second is our research into central bank digital currency. And I'll give the normal Fed disclosure. These are my words, not necessarily those of the Federal Reserve System. And a quick shout out to my old boss, who I see, Paul Conley, who was one of the ones that really got us started in the olden days of looking at technology from a new perspective. So just want to say hi to Paul. Yeah.
Thanks, Jim. Hi, everyone. Great to see you all here. My name is Neha Narula. I'm the director of the Digital Currency Initiative, which is part of the Media Lab at MIT. And we focus on research and development into open cryptocurrency networks and digital currency more broadly, including central bank digital currency. We're engaged in about two major efforts right now. One is focused on the long-term security of open cryptocurrency networks, and the other is in developing and researching central bank digital currency. And yeah, I'll pass it back to you, Karen.
Thanks, Neha. So just to round this out, I'm Karen. I founded Blockchain by Women, and we're devoted to increasing diversity and education on the latest blockchain topics. I also co-founded Blockchain Intel, a company focused on compliance reporting, and I am now part of AppDome, where we secure mobile apps, including apps for digital currency exchanges. So why don't we get started with some of your thoughts on, at the highest level, what technologies are being considered to support CBDCs, and really how do these CBDCs address particular challenges, whether it's the unbanked, the underbanked, and in different ways, than are currently available. So
well, I'll start with, yeah, we're doing some joint research with MIT, which actually I'll let Neha talk about. But in addition to that, we're also looking at about 40 platforms to see whether they could be good usage for CBDC in a retail space. So we're trying to cast a wide net of looking at all technologies, looking at all the distributed ledger variations of Ethereum, Hyperledger, et cetera. We're also looking at private sector actors that say they can build or have built a CBDC that works on a scale for the US. What we're doing is a comparative analysis of about 40 different platforms, DLT and not DLT, and then bringing a few into our labs to see if they can actually meet some of the rigor of some of the requirements you mentioned, resiliency, throughput, et cetera. So we're really technology agnostic at this point, looking more to see what's capable on that front. Now, you want to talk about our joint work?
Definitely, Jim. Yeah, so I think it's important to distinguish between different types of CBDC. The one that we're working on researching with the Boston Fed and Jim's team is what we call retail CBDC. So in a retail CBDC, this means that regular consumers might use it to transact. That means that it's really important that we're able to handle a very high throughput, depending on the population of a nation and how much it's used, and also low latency. You don't want to have to wait too long for your payment to go through. This puts some pretty stringent requirements on the technology that we use. So as Jim said, they're investigating a lot of different platforms. In our research, we're considering what a new design might look like if we were to think about CBDC from the ground up, from scratch. Part of the research we do at the Digital Currency Initiative is rethinking some of our systems and looking to the future. So the work that our team is doing right now is really from first principles, thinking about, how might we want to design such a thing? What might we want it to look like? What features might we want it to have? And importantly, what are the different technical options and how do we measure and evaluate them? We don't have one right answer yet. It's about exploring the trade-offs.
And I think the reason why that's important, let me just follow up a bit on Neha's point, is the U.S. currency has been in existence since the beginning of the Fed, so well over 100 years. And what we're building is the potential for the next 100 years. So we can't assume that the technology exists or the right combination exists, which is why we're basically letting the research take us where the research takes us, as opposed to just picking a solution and moving with that. So we think it's important to look at it and think about different combinations of technology. It may be that it's not what we're dealing with today exactly with a platform, but some combination.
Right. So Jim, can you provide a little color on how a CBDC or how you're thinking a CBDC will differ from FedNow or other Fed initiatives?
Yeah, well, FedNow, for the audience, FedNow is a payment platform being developed by the Federal Reserve System, which is called a real-time or instant payment system. So that is traditional in that in order to access FedNow, you go through a bank. And the money you're moving in FedNow is not central bank money, you're actually moving commercial bank money. And so it's traditional in that it's the same players that would work with ACH or wire transfers or other traditional methods, albeit it's being built now, so obviously it's using the latest technology. We see these as complementary. What we're trying to do really is, we get the question, if we have FedNow, why would we need a CBDC? What we're really trying to do is offer choice. Offer choice of different ways of paying for the citizens. And while there may be some competition there, we think it's healthy competition, but it's mostly about choice. And so it's different fundamentally because it's central bank money. So the money we're moving actually is central bank money versus commercial deposits. And we are looking at the latest technology and moving forward and different potential different use cases.
And Neha, can you provide a perspective of other central banks you're working with?
Sure. So we're really lucky at MIT to be able to talk to a variety of central banks. Of course, I don't speak for any of them. These are my own thoughts, and private sector actors and others who are doing really important research in this space. I guess to sort of synthesize some thinking, what we've seen in the last 18 months or so is that more and more central banks are starting to take central bank digital currency very seriously. So there was a survey that the Bank for International Settlements put out in January, which showed that 86% of central banks are investigating digital currency. And what we're seeing is that many central banks are not sure if they want to launch a digital currency at all. They have not made that decision yet, nor have they undergone a lot of the thorny questions around exactly how it might work and how it might fit into the financial system. However, they are starting to realize that they might need to consider launching one in the future. And thus, it's a very good idea to think about how such a thing might be designed and to get ahead of some of these questions so that, should things move very fast, they will be in a position where they can consider launching one sooner rather than later. So I would characterize what I'm seeing as a new phase of wanting to learn more and wanting to experiment that has gone beyond proofs of concept or playing around with existing technologies, and is really trying to attack some of the thorny questions that can only surface when you're actually building and trying to build what you might use.
Yeah, I'll add to Neha's point as well. First, I should have said this earlier. We have made no decisions about moving past a prototype with MIT. So there's no decision yet to go into pilot and or production. That's a much longer process of deep discussion with the industry. But we are also doing work with other central banks. We authored a paper also under the BIS umbrella of 7 central banks that talked about the opportunities and challenges of CBDC. We've actually been working with other central banks since 2016. We started our work really with experimentation in the wholesale digital currency space and found out that we were amongst the leaders with Singapore, Canada, Bank of Japan, and the UK. So we've actually been working together, bilaterally and as a group for 5 years now. And it's a perfect opportunity for us to share our learnings and to grow together with the technology. I'll also mention that the work we're doing with MIT, we're going to be eventually publishing joint research, technical research with them, with Neha's team, and then creating an open source license for the code. Our goal here is really to help others learn from the work we're doing, which is another way of making sure that everybody can gain and everybody can then look at that code, improve upon it, use it in whatever form. So we think the open source is good for the other central banks to get eyes on what we're doing as well.
Great. So thank you guys for that background. Now, in terms of going to our technical discussion here and the requirements, let's first talk about interoperability. So when we talk about interoperability, a CBDC would need to coexist with the current financial system, as well as potentially other national CBDCs. Jim, how are you looking at, or how is the consideration going around addressing synchronization of payments between these systems, among these systems? Will there be final transfer of CBDC if the final transfer of an asset is in the corresponding system? So could you talk about delivery versus payment, or payment versus payment? And could this functionality enable greater simplified or faster cross-border payments among the national CBDCs?
Yeah, there's a lot packed in there, Karen. Let me touch base on a few things. First, existing payment systems in the US, obviously, if we went to production, we'd coexist with these systems. And we've really made no specific decisions about how they may coexist. But I think you can see an opportunity for the private sector to innovate in ways that can basically bridge the gap between, say, a CBDC and FedNow. Our system would not have to talk directly to the FedNow system if, say, the banks or other technical intermediaries could bridge that gap and move between a FedNow transaction and the CBDCs. You get interoperability in many different ways, and we haven't designed in yet whether there'd be any direct connection. But I think there's plenty of room for innovation in that space. On the cross-border space, that's an area of many issues. The BIS recently put out a paper about cross-border, what some of the issues are in the roadmap, trying to move it forward. And those issues are much greater than just technology. So while I do think multiple CBDCs being joined in a certain way can solve a lot of problems for moving that money around, there's been no real decision yet because some of the issues are legal, some of them are regulatory. Some of them are, when you're moving cross-border, do you have an intermediate exchange currency? Can you directly exchange the currencies across it? And then there's the technical issue of interoperability. So I think there's a great opportunity there, but there's a lot more to tackle on the cross-border side than just technically connecting up systems. I do think we need to design with that in mind, and we have to also be looking at international standards or technologies that can bridge that gap. So some of the technologies help bridge, and others have to do with creating common standards. Let me stop there and see if Neha wants to add to both interoperability and cross-border, and then come back to the delivery versus payment of securities. I think that's a separate question we can follow afterwards. Neha?
Yeah, just to follow on, Jim, the only thing that I would add is that, given that there are so many different types of questions, different countries are probably going to make different choices. And so that's going to make interoperating even more challenging. However, I think it's important to see as we develop these systems, is there some common functionality that we hope to support across systems that'll make transfer easier? And that kind of goes into delivery versus payment and payment versus payment. So Jim, why don't you go ahead and take that?
Yeah, so first of all, we've mentioned that there's two types of CBDC, retail, which is what we're working on now, and wholesale. Wholesale, you can think of as more of a wire transfer, RTGS system, large value interbank transfers. And that's the type of system where you really would get into the question of delivery versus payment of, say, a security. You don't want the security to move if the money hasn't, and vice versa. And so there are technical solutions for making sure, let's just say you have CBDC on one platform and you've got securities on another. There are ways of working across those two platforms with, say, hash time lock contracts that can bind those two transactions together in a way such that either they both go or neither goes. Some of those trends exist today. There's a good paper that was written by the Monetary Authority of Singapore where they did tests of that with the Bank of Canada and showed that on two separate distributed ledger platforms, you could do an atomic swap, as it's called, between cash on one leg and securities on the other. So I think there's technologies there that can help with the delivery versus payment or payment versus payment, which is when you're exchanging two currencies. But I see that more in the wholesale space than what we're working on in the retail space.
Okay, great. And if you have, and thank you for providing the color on how other countries are addressing this. Now, let's shift a bit to privacy and confidentiality. And I see some questions on this coming in from the chat. What technologies could provide the appropriate level of privacy or transparency? For example, at EPDOM, we help prevent data leakage from copy paste, screenshots of confidential information. In my prior experience in working with law enforcement, we saw a lot of malware being downloaded to devices and hackers going after clipboards, whether they were mobile clipboards or desktop clipboards for private keys. So that's one issue, is just providing protections against data leakage and data loss prevention. On another topic related to this in terms of privacy is what are the existing levels of financial privacy that could be addressed. For example, transaction details are only visible to the counterparties of that transaction, except perhaps in the case of infrastructure operators, but not anonymous. And so how do we deal with those types of issues and addressing anti-money laundering, KYC, know your customer issues? So if you guys could share your thoughts on privacy and confidentiality from those 2 points of view. First, how do we prevent data leakage and prevent secure data being stolen or hacked into, and or private data, being hacked into or stolen. And then the other is providing access to confidential information as needed.
Yeah, so as you said, we've talked before, this is more of a technology discussion than a policy discussion, but you have to talk about policy in the trade-offs that you have when you're thinking about privacy versus traceability. That traceability could be for system integrity, but also for know your customer and anti-money laundering. So I think first you have to recognize that these things are inherently at conflict with each other, because the more privacy you have, sometimes the harder it is to do KYC and anti-money laundering, current terrorist finance, et cetera. And the more richness you have in identity and data, the easier it is to catch the bad guys, but then you've got more data to protect. So I think first it's important to realize that these two things are somewhat at odds. And I would say, once again, we have not set policy, but I'd say a goal would be to maximize privacy, but still allow for compliance. And there are many ways of still doing that. Another principle is, transfer as little data as possible to satisfy the requirements of the system and compliance. So don't transfer data that you don't really need within the transaction. Minimize whatever PII is available to all parties. And a lot of this really depends on the infrastructure. So for instance, if we would go directly to citizens with accounts, then that would have a different privacy profile than if they're coming in, say, through a bank. The bank then could do the KYC and AML work, and the Fed would never have to see that type of data for the transactions we're processing. So it really comes down to a number of factors, and making sure that many of the technologies exist today. But I think one that is a newer technology that allows you to do compliance checking, for example, without exposing the data is, for example, zero knowledge proofs, where you have the ability to analyze data without seeing it, and then only expose the data if you have a certain, say, compliance or something like that. So some of the newer technologies do have the capabilities to allow the privacy while still meeting the requirements of compliance and anti-money laundering. And I'll pass it to Neha, because I know she's got a lot of great expertise within the DCI.
Yeah, no, sometimes I feel like I don't have anything to add because Jim gives the answer I would have already gives the answer I would have anything I would have said. Yeah, so just to echo what Jim said, I think one major challenge for us right now is to it is very exciting that we have this opportunity to rethink a little bit the way that privacy and compliance might work, and to offer options that might have some pros and cons that are worth considering. So it's exciting to have this opportunity and to use new cryptography essentially to see if it can help us achieve this tension, which lies between privacy and traceability. When it comes down to, I think that there's a few different things here. First of all, a transaction has many different pieces of information. There's the amount, there's the sender, there's the recipient, there might be auxiliary data, there's where the funds came from. And so it's actually pretty useful to break down all these different pieces of information and to think about which ones are useful where. Which ones do we need to use to validate the transaction, to make the transaction go through? Where might we want to rely on third parties to do some of that work? And where might we have to rely on the central bank to do some of that work? So there's a lot of different options there when you break things down. It's very useful to think about breaking up authorization from transaction execution as well. So, think about how a wallet or a person or a transaction has been authorized to take place versus it actually taking place. And maybe those are two different entities. So there's a lot here to really play with. A major challenge is going to be, given the state of where things like zero knowledge proof technology is right now, can we use it at the scalability and at the latency that we might require? And that's, I think, still a little bit of an open question, and also to understand how that technology is progressing. So, how do we estimate it getting faster and cheaper, and what does that curve look like? I think that's a really important question too, to know that if we can actually use this at the scale that we might want to consider it.
Karen, one more point, since you mentioned compliance, and I try to say this whenever I speak on this topic. If anybody's been to Boston, you know that our roads are, not very straight. And that's because we pave the cow paths. So what we're trying to do here is, when we think about building something for the future, we don't want to pave the cow paths. We don't want to make the assumption that the way compliance is handled today is how we have to do it tomorrow. And it's really freeing to have the great minds at MIT and the folks on my team being able to think outside the box when you think about privacy and traceability. So I think it's important for anybody working in the space to free yourself from how things are done today. And it goes back to your question about FedNow. FedNow is following certain norms that are built within existing systems, which is fine. But as we get into a brave new world of CBDC, we have to make sure that we're thinking differently about that. And I think this is one space where I really think we can maximize the privacy and still do what's required for the compliance side of things as well.
Yeah, so that's great. So we have a question from the audience, and this, given what you just said, Jim, I'm wondering if it is something that is an old way of doing things or potentially a new way. And that is a question around, will we have a private digital ID or a digital bank ID? And have you guys talked about that and have some thoughts on pros and cons or which way to go?
Well, I'll just say, once again, my personal opinion is, identity in the US is broken. We rely on social security numbers for way too much. I mentioned my other job is trying to prevent fraud in payments, and we're left with, a legacy of systems that, just don't work today. Unfortunately, a digital identity, if we had it, would be a great enabler of CBDC because we'd have something to anchor ownership to. We don't today, so that's something that we're just at the beginning of discussing. I do know there's an awful lot that's happening in Washington relative to digital identities, and some of those are linked directly to the potential need for CBDC. So I think the linkage is strong. Just in the US, we don't have a digital identity to hold on to. So whatever it is will be new or will be something that exists today within existing infrastructure until something else comes along.
Yeah, yeah. The only thing I'd add to that is, we've been having a conversation about digital identity for many years, and I think it's really helpful to think about digital identity from the viewpoint of specific use cases. And so, it's hard to think about digital identity for everything all at once. And I think if you start to look at it from the perspective of different use cases, you can start to see really specific requirements and think about, okay, should this, involve the private sector or not, and let's look at other different systems out there and see how they operate and what their drawbacks are. So it's exciting to see that the use case of CBDC is sort of reigniting the digital identity question. It's a good specific use case to try to think about.
And I'll add just one thing, Karen. In your opening question, you actually also asked about the unbanked or underbanked. We didn't really touch on that. I do want to say that it's been a personal mission of mine to try to help solve that problem. And I've failed woefully of moving the needle. I thought at one point it was the phone. That's all you need to solve the unbanked problem. But I really feel that a CBDC can help to solve that problem, mainly because it's central bank money and there's no settlement risk. And just think of the power of someone who today gets a check. And I'm looking at Paul Conley again, thinking about checks, and takes that check to a check cashier, pays exorbitant fees, gets money orders because no one trusts that they're going to be able to get the money to them, sends money overseas in expensive ways, and then goes into a utility company and actually pays with money, which happens a lot. If they got a CBDC, they could erase all that other process and those costs. So, and it is where I think innovation can help. So I didn't want to skip the unbanked question or the underbanked question because it's a significant issue in the US. And I think the technology, the innovation on top of a CBDC can be a great enabler to finally allow me to be successful in helping to move that needle.
Yeah, I'll just add as well. I mean, we really do need to think about the unbanked and the underbanked. Oftentimes, proving identity is a major part of the challenge for them getting access to these systems in the first place. So we don't want to recreate the same onerous requirements on top of a new system. We really want to think very carefully about, how to make sure that people can have access.
Yeah, so there's a number of questions from the audience. I'm trying to weave them in here. So following up on the points you guys just made about that in terms of the unbanked, and going back to an earlier discussion we had around interoperability, let's talk a little bit more about retail. What would the interoperability look like for the retail use case? And given the unbanked, are there any other sort of considerations you have made or thought about there?
Well, I think we've not gone too deep into that, but I think if you look to China for examples about how much you can do with a QR code and how you can go to a food stand in a very rural area of China and have a QR code and read it with your phone and pay with your phone. So I think that's one area where a lot of technology exists today. It's really about infrastructure and moving it. These are two-sided markets, which means the retailers need a reason to put new technology in, and they're going to, and if they wait for volume, then we have the issue of the first fax machine is pretty quiet, so it's the interoperability of these things. I think that the technology has a lot to offer. And I think we also have within the retail space is a great area for innovations, but I definitely see the phone as an interoperability device. And I forget the number, but there's been some research by the FDIC that talks, in the Board of Governors in Washington, talks about the number of unbanked people that have smartphones. And that is their computer, it's their TV, it's everything. So I think the penetration, in unbanked, underbanked, allows for the phone to really be that access device and to use various technologies at point of sale, as an example of what retail could be, or via websites.
Yeah, so to follow up on that, and to the audience, thank you for your questions. I'm going to get to them. To follow up on that point that you made, Jim, and to answer some of the other questions that people have, with the mobile device, with the phone, like you said, being ubiquitous and something that everyone uses today, but also, as we've seen with digital currencies and Bitcoin and all the others, everyone is using this to make their transactions. So how, in going to the next discussion around security, how are you thinking about securing these mobile devices, these phones? And there are a lot of ways to look at that, right? There's not just securing the device itself, the phone itself, but it's the data on the phone. So it could be your password, your private keys. I know that in years past, people have complained about how their private keys were stolen. But there's also the confidential data that may be taken with screenshots, clipboards, like we talked about. There's also, besides the data itself, right, on the phone, there's also the connection. So we've talked a little bit about this, right? The connection between the phone and the backend system, the Fed, or whoever else, the central bank. How do you secure that? Because as we've seen, there have been a lot of attacks recently, and how do we address those attacks and prevent, attacks on, our country as well, not just the individuals themselves. So if you could just talk a little bit more about how you guys are thinking about security, especially in light of the point you made, Jim, about phones being probably the primary device that people will be using to do transactions, or maybe using to do transactions. And in particular, how do we secure the data on them, the applications, and the channel between the applications and the back end? So
I'm going to ask, someone is not on mute and we are jumping into the conversation, so if you check your mute. Since I'll be going first, I'm going to go last for the last half of our time together. So I'll ask Nate how to start and I'll chime in after her. I'm just so passionate about this stuff. I have a hard time not jumping in immediately.
No, it's great. Yeah, so I think, the questions you raise about security are very good and are definitely top of mind. A few different points that I'd like to make. First of all, I think it is right to think about it as a chain of security. There's the device, there's the transport between the network, between the device and whoever's processing the transaction. There might be multiple steps in there. And then there's the endpoint of the data that's kept wherever the transaction is processed, and the security of that data. Definitely what we've seen, not only in the cryptocurrency space, but in the broader sort of security, cybersecurity space, is that data at rest, you shouldn't rely on it being hidden for too long. And we need to think about that. And I think that's one of the strongest reasons for considering building central bank digital currency as a cryptographic platform, because we can actually take advantage of some of the properties of cryptography, use cryptography to encrypt the data moving across a communication channel. If we make the data private, then when it's at rest and being stored, then that data can't be accessed by a hacker or a malicious third party, just like it can't be seen by anybody else. So narrowing in on the endpoints, I think when we talk about privacy, that's actually also talking about privacy and security at the same time. Data that is not clear text can't be seen by anyone, at least for a while, barring cryptographic breaks. When we're thinking about the device, I think this is actually a place where we have a lot to learn about what has worked and what has not worked in the cryptocurrency space. What we've seen is that, yes, it is in fact very challenging for users to secure their private keys and to keep track of them and to not lose them. And what we've seen spring up are sort of different ways of helping users do that. One example is hardware wallets. So it's very interesting to think about trusted hardware and the role that that might play in helping users secure their keys. And another thing that's popped up is the role of a custodian or a third party that helps a user secure their keys. You can even think about using the cryptography to do things like multi-sig. So, if one key is compromised, it doesn't mean that all your funds are compromised. So I think, to summarize, this is why we're thinking about it as a cryptographic platform is to get some of these benefits around security.
Yeah, I'll just add a couple of points. First of all, the weakest link is usually not the technology, it's the human. And so like other systems, we have to think about what are the human actions and how are they creating the risks. As we all know, the theft of cryptocurrencies has nothing to do with hacking into Bitcoin or other platforms. It's people, as Naha says, not controlling their keys properly, normal phishing, spear phishing, all the appropriate things. So some of these are traditional problems we have to solve because of who's holding the secret keys. Others, I totally agree that cryptography can be a great enabler here. But as long as we can meet the requirements of throughput for the system and the amount of friction someone will take to use a system, we can make it foolproof, but no one would use it because it takes forever to get through the security protocol. So these are traditional problems, but I think the solutions do lie in some new technologies. It also has to do with the intermediary. So once again, we have not made decisions on who intermediaries are, but just say a bank is between you and the Federal Reserve, like a regular payment. Well, the security between you and your bank's website or phone app or whatever, traditionally have been safe lanes. And then what they then move forward in the way of a transaction to the Fed for settling has much less data than they know. So I think some of these are based on the model that's used for intermediaries, and then what data is suppressed because it doesn't need to be sent. The other part of this, I don't think I want to talk too much about, but from a cybersecurity perspective, there are many issues from security that matter. Whether it's spamming and denial of service attacks on a network, or Russia, or foreign nation states trying to attack. Obviously, if you built a digital currency, it'd be attacked as much as any major system in the world because it just draws the bad guy. So I think that's another aspect of security we have to consider in existing and then new technologies as well.
Mm-hmm. And so what are your thoughts, to going to security and also talking about fraud as a related issue? What do you see as preventing fraud and really addressing crime, that may be occurring or that might occur with CBDCs and taking a look back at cryptocurrencies and where crime has occurred there?
This is one time I really wish Jim went first on this one. I think this is a very challenging problem. It's an extraordinarily challenging problem. We're facing it in the existing financial system today. There are issues with cryptocurrency as well, and we're still sort of starting to sort out how we can potentially prevent illicit activity or detect illicit activity or fraud. I don't think there's an easy answer here, and I think it's something that we're going to have to sort through and explore. I'll go back and reference Jim's point about not paving the cow paths. It's unclear to me that the existing way of doing things is really the most efficient and most effective. So we don't want to restrict ourselves from thinking about what might be some new effective ways of helping with this problem.
Yeah, I think a lot of this, as I said before, are the traditional problems. How do you stop people from doing dumb things and expose themselves to theft because of spear phishing or clicking on links? All the normal things I think have to be done as a starting point. But I also think we have opportunity for using artificial intelligence and other ways of looking at data within the platform itself, potentially to actually look for data that may be suspect and may be sending a signal. Most of it, as you know, Karen, from your job with trade analytics, is a lot of it's forensic and understanding what the patterns are telling you about this looks like a bad guy or this looks like a bad scheme. So I think we have an opportunity to build some of that in as well. I did see one question quickly go by the chat talking about smart contracts and functionality, and some have argued that we can make the money smart and make the money prevent the bad guys from the theft. I'll say I don't believe that. That's one option, but I think if you code too much into the currency to try to have intelligence itself, I think you open yourself up, one, to performance issues, two, to a greater attack vector by having that programmability in the money itself, and also just operational challenges by making it, too much of a challenge to actually manage. So I don't think the answer to fraud is to embed it in the money through smart contracts or other things, but you can layer technology over the CBDC to do some of these other fraud prevention work. And I think we've seen many things that work well in existing payment systems, but I think starting from scratch, we can do a better job of it from the beginning.
Okay. And so there've been a series of questions from the audience about banks and how they're going to operate in the future. So one of them is, will banks have their own, do you think, currency or stable coins like banknotes of before, especially now with the advent of CBDCs?
I guess I'll start, Mayha, since it's talking about the banking side of this. I guess we have great lessons. Before the Fed was brought into being in 1913, 14, banks had paper currency. Cities issued money. States sometimes issued money. And what happened is you'd have currency that was not trading at par. So imagine having two different currencies that say they're $20 worth of value, but you don't get $20 worth when you exchange them because one's from Chicago, one's from Bank of Boston. So there have been history lessons about what happens when you have multiple private currencies that start to trade at not par. And I'm ignoring the volatility of crypto, just even from a stable coins perspective. I think it creates challenges that have been borne out in the live experiment that we had in the late 19th century here in the US. And I think having the common public good currency brings a lot of value to the system. I'm not saying there can't be some, stable coins that exist or coexist with currency, but I don't think that is the solution for all currency needs of the US, is to move to private actors for that. I think there's a role for the central bank and central money in all cases, at least as an option.
Yeah, my understanding is back when banks would issue their own forms of money, it wasn't a great way to operate. That what we have now has been a big step forward from that. So a lot of different entities issuing stablecoins feels like a bit of a reversion back to that, and all the challenges that raises, which is different currencies having different backings and different levels of trust in the organization and different counterparty risk, and thus they don't trade at par, and someone has to manage all of that and do the conversion, and the user has to decide which one they're going to hold and spend with. I think that there are a lot of market and network effects around currency. So it does seem like things, just sort of pondering the future, I would say that it would seem like things would probably coalesce around something very strong. The pros of the central bank digital currency is that it's the ultimate stable coin. It's the risk-free stable coin, so to speak. It's actually issued by the central bank. You don't need to worry about the assets backing it and whether that's secure or not, or they've been stolen, or they're really there. It's the central bank's digital currency. So that's a very strong point in favor, I think, of a central bank digital currency, eliminating that side of the risk. That said, there might still be a role for stablecoins to innovate on top of this. The central bank is probably not going to be moving the fastest with new features or new ideas. We want to test out those types of things in the private sector. So it's interesting to think about how these things can coexist and how we can, how the private sector might build on top of central bank digital currency as well.
I just want to reiterate too, I have no problem with stable coins as a potential use case for even interbank transfers cross-border. I think there's potential there, but I was reacting more towards whether the private currencies could solve the problem as opposed to a CBDC. I definitely see the need for CBDC of some sort in the mix.
Right. And so to kind of reiterate that point or go back to it, then you see that it would be possible for CBDCs to connect to domestic faster payment systems or domestic internal systems. Is that correct?
Yeah, I can see interoperability. I mean, it's two separate instruments. The money you move, say, with FedNow and what you do with the CBDC. But I think there are ways that you can, move across those different channels or different instruments, be it by the platforms themselves or through intermediaries. As I said before, if you had a bank that was able to hold CBDC just like they have cash in their vault, then they could move that through other payment systems by debits and credits they do on the accounts today. So I don't know what the answer is, but I know that a simple solution is intermediaries play those roles of bridging the gap.
So then this goes back to how the Fed will manage that in terms of issuing both fiat and digital dollars at the same time and keep the same amount of money supply, and kind of how would you keep track of that?
Yeah, I mean, how we anchor the digital fiat currency versus anything else. My assumption would be, and this is policy. This is decisions between Treasury and Federal Reserve because they manage the money supply today. One way of thinking about it is for every digital fiat CBDC you create, you've got to pull a paper dollar out of circulation so it's uninflationary. You're not adding to the amount of currency in circulation. And so, one thing you have to think about is if we move down this path, we need a process for minting the CBDC. So there's a lot of technology associated with how do you mint it? How do you create something in a safe, secure way that cannot be counterfeited or double spent? And so that's tied up in minting and even how the currency is held. So I think, the problem is definitely to solve. I think it's less of an issue about counting it and making sure that we have the numbers right as to how it's minted and what is the policy. How do you create that digital currency and either keep it on at a level amount or issue as you decide you want to increase the money supply, as with, say, the payments for CARES Acts, et cetera. So I think the technology is important, but I think it's definitely doable.
Right. And then in terms of the technology, I know we chatted a bit before about this in terms of, well, would it be a blockchain based technology or a universal ledger that people share and can see where everything stands? Or have you considered other technologies that would be better suited than, say, a blockchain based system?
I'll start this since the digital currency initiative has been focusing on that for 5 years now. So do you want to start, Neha, and I'll add in my own thoughts?
Sure. I guess I'll just say, and please keep in mind, I'm not speaking for anyone else, but it's important to note that I'm obviously at the Digital Currency Initiative, we've been looking at decentralized technologies for 5 years, and we think that they are very inspirational and powerful and exciting and really quite new. It's important to note that central bank digital currency is not the same as cryptocurrency. There is a central bank, there's a trusted actor, and it's very important to weigh the pros and cons of the different types of technologies. And it's not just, what's more decentralize or what promotes a token or doesn't promote a token, you can implement some of those features on top of different types of backends, actually. But it's also thinking about how long has this technology been around? How well has it been tested? Has it been put through real world production use cases? And so I think when you start to weigh all of those different things, it's not that any option's off the table, but it is the case that it's important to note that that's not always the best choice, and that you can definitely, if so desired, achieve some really interesting features of digital currency without necessarily having a what you might consider a blockchain behind it. So there's a lot of flexibility there in the design space. So Jim, hopefully I didn't. I'll let you chime in.
Known you long enough to know we're going to agree on this. And like I said, we have to be agnostic because we don't know what the answer is yet. It also could be a combination where the engine itself that mints and moves the money is one technology. The blockchain comes in for, say, communicating receipts out to people that have received the money. So it's not one technology or not. There's definitely room for whatever it is, though. We have to do it in a way that future-proofs it, such that we're not obsolete within 5, 10, 20 years. There has to be something built on solid foundation and the ability to upgrade. Neha's mentioned cryptography. So if and when we get quantum computers and are worried about the potential for new attacks on a crypto-based system, we need to be able to react and move ahead with other technologies. So it's the need to make sure we can constantly evolve as well as where we start.
Okay. And so we have a couple more questions on this front as we compare to how other nations have done this. And even if we say spend a little bit more time on a distributed ledger-based system, how would the impact on, say, electricity consumption be an issue? If you look at how other countries are doing it, such as China, with WeChat and Alipay with more closed loop systems, what has what have you seen and considered there in terms of the potential risks you're looking to avoid? And then so why don't we just pause there and see if you guys have any comments on how you compare the blockchain-based system with, say, closed loop systems and other potential issues that blockchain-based systems bring about, like electricity and other issues.
Maybe I'll just address the electricity issue really quickly, because this is one of my pet peeves. I think, because of the way Bitcoin works, people assume that any digital currency technology might require large amounts of energy usage, and it's just not true. There are many, even cryptocurrencies out there that do not require large amounts of energy usage, because they're not based on what's known as proof of work to maintain the security of the open network system. There's many different blockchains that use proof of stake, for example. And I think when you have the potential for an authority in the system, it's even less likely that you would use something like mining. So it's definitely the case that we can implement digital currency without extraordinary energy usage, at least no more than it takes to run your email, for example. So, just the sort of regular internet service type energy usage.
Yeah, and I'll add that it's a pet peeve of mine as well. I saw one question about whether we're going to pay for the gas, ether. And the bottom line is we're not going to be using it. We wouldn't use a system that has a cryptocurrency as its base to begin with. So it's counterintuitive. But what I would say is where we are against other countries. What we know about China was, they've been building this for 5 years, and reportedly, because they don't open the doors too much, reportedly it started with a blockchain-based system, and now they're at more of a traditional technology-based, not blockchain. But some of the central banks are looking at blockchain. I see David Mangini there, and the company he works with provides solutions. You've got the Sand Dollar in the Bahamas. You've got what Sweden is doing. They're working with Accenture on a quarter-based system. So it's a combination of various ways of approaching it. I think because people don't know what the final answer is yet. So I think it's important to cast a wide net, and most other central banks are not as far along as the Fed. I'd say we're about, behind China, obviously, because they're in a production pilot. And I'd say we're on par with where Sweden is. But others are just trying to figure out where they're going next. Are they going with distributed ledger? Are they building in-house? Are they buying it? So I think in a comparison perspective, as far as developed nations, I'd say outside of China, we're probably amongst the leaders and purposely being agnostic on which technology we end up with.
Mhm. Great. And so as we kind of round out the last 5 minutes here, there are a number of questions around, whether we'll have, the U.S. be doing something similar to Alipay or not. What would you guys say is your vision of where we will be in the next year, as well as, maybe a little longer term than that, but just to share what you think we will be doing, where we will be going. Um, and yeah, open it up to you guys.
All right, I'll start on just a couple of points. First, if anybody's ever built a payment system, this is not an overnight operation. Sometimes these takes 3, 4, 5 years to get right because it's more than just the tech. So I think what we're going to see over the next 5 years is much more focus on retail CBDC and also more focus on wholesale. I think there's still a number of efforts going on in the world. We've gone from last year to very little retail work done, or 2019, now to dozens of central banks saying they're going to build systems, prototype, maybe pilot. So I think it's only going to continue to move forward. I think once we open source our code, we'll see a lot of attention and building off of that. So I don't know where we're going to end up, but I can just say that our goal in 2 years is to be positioned to act if we were either asked to by Congress or told to by Congress. But we decide it's time to time to act. And so our goal for 2 years is to be educated enough to know what the technology can do, and then move from there. And I think it'll only increase in scope and the number of central banks working in the space.
And Neha, if you could, in your response, add in any color around particular platforms you might have looked at. You talked about, Jim talked about Ethereum, but are there other ones, whether it was Hashgraph or some other blockchain-based system or blockchain-based system? So just in terms of technology.
Yeah, sure. So I saw some of that go by in the chat. So I think, we've been looking at this for 5 years, and 5 years ago, I actually wouldn't imagine that we'd be where we are today. I think that things have moved faster than I expected, which has been incredible. Where I hope to be in another year or two is we've really elevated the conversation on CBDC, and we've surfaced some really important thorny questions that people maybe hadn't even started considering yet, hadn't totally specced out in how this could work, because we've gone a layer deeper, because we've actually gone a layer deeper into thinking about the problem from first principles and the requirements of CBDC. And I guess that's part of my answer to this question about, are you going to use system X or system Y? None of those systems were designed with the CBDC use case in mind, none of them. And I think it's important to at least consider how one would design something from first principles. What are the unique requirements of CBDC? How is it different than a cryptocurrency, or different than a ledger designed for a supply chain, for example? It's worth thinking about, what are the really unique problems here, and how might we want to solve them if we could start from scratch? That's not to say that people won't use any of these platforms. Everyone will investigate them as they should and make their own decisions. But I'll just make the point that it's not the case that any of these were actually designed for CBDC, and I think it's important to note that.
Yeah, I'll also add too that different countries have different contexts. It could be the way that people work, it could be the laws, it could be regulations. So there's not one size fits all, no matter how you look at this, and not necessarily one technology. What's going to work for China, or what's going to work for the sand dollar in the Bahamas, is not going to work for China, because their volumes, we're looking ourselves in the US, we don't have a number yet, but multiples of tens of thousands of transactions per second. You don't need that in an island nation. So they're different issues. So I think it's important to always look at the context of the particular countries you're looking at and what solutions will work there. And it could be a combination of things because even privacy is different from country to country. It may require a different solution.
So thank you for that. And I know there's some other questions here. If you guys could stay on for just 30 seconds. And there were some questions around how CBDCs could be applied specifically to B2B transactions, or do you see that more like retail transactions? And this is in the context of small businesses. So, when I had my small business, it was much easier to send cross-border transactions using stablecoins. And if there was a CBDC for the US, it would be great to use that. So have you had any sort of considerations in this area, or is this, further along in their thinking?
I guess what I'll say about B2B, another area where I beat my head against the wall for a long time, is part of the challenge with B2B is you usually need remittance information to say why are you paying a particular amount of money. So you need remittance information so the receiver can say, oh, this $100 coming from Karen is to pay for this receipt. And so what you wouldn't have directly or natively in the CBDC is moving that kind of data through the network. Now, that's not to say that you can't build something over the CBDC that would allow for traffic to move that does have that remittance information. I mean, even for a small vendor, that matters because you can't book that money unless you know why you're getting it as a business. And so I see that being the major reason why it's an issue relative to B2B. But once again, it doesn't mean that it can't be built on top of a CBDC. The rationale would really be, what are you gaining from that, and are you benefiting? So I think it's more of an innovation on top of than the CBDC inherently helps.
Great. Well, thank you both. Neha, did you have something to add, or?
Nope, I think that was a great answer. Yeah.
Great. Well, thank you all. I know there are a lot of questions here. So thank you to the audience for sharing. And it was great to hear your perspectives on some of the key issues, whether it was interoperability, security, privacy, and confidentiality. So thank you very much on sharing your thoughts on the technology as well as the policy considerations, since they do go hand in hand. And for those of you in the audience and those who could not attend, we will have this recording available on our YouTube channel. So please share with others, as the insight, Jim, you and Neha, you provided were extremely valuable. So thank you very much for your time. I learned a ton, as I always do from you. So thank you, and look forward to seeing you soon.